What is going on, YouTube, Discord family, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. And today is August 18th, 2024, year of our Lord. And it's been a crazy month, right? It's been an absolute crazy month. And last week was no different. But before we get into all of the NASDAQ versus ES stuff, just a little bit of housekeeping. Thank you guys so much for your support throughout this journey of ours. We've decided to kind of chill out on the live streams. We've gone private. So if you want to join us over there, the Discord link is in the description down below. Other than that, you can catch us periodically with these top-down analysis, prop firm reviews, and later we'll be doing trade review videos as well. But thank you guys so much for pushing us close to that 2,000 subscriber mark. So please make sure you tip the barbers, aka hit the like and subscribe button, turn those notification bells on so you get notified every time we do go live and or put out a video. Now that we got all of that out of the way, let's jump right into the top down analysis of the S&P 500 and the NASDAQ. As per usual, we'll be starting with the monthly chart for both instruments. We'll move down to the weekly, the daily, the 4 hour. I'll show you kind of where I'm looking to anticipate in price, what I'm expecting for the market. And then we'll take a look at the volatility index and go over some news for the week, and we'll get you guys out of here. All right, without further ado, let's take a look at the S&P 500 and the NASDAQ. They pretty much look identical. 2 weeks ago, we got this huge 6% or 10% or 11%, 12% drop all the way down, and everybody turned bearish, including me, right? Including me. And this market was like, yeah, chill out with all that bearish talk. Essentially, ever since that drop about 2 weeks ago, some may call it a flash crash, call it whatever you want, it happened, right? But ever since that time, I mean, we've done nothing but rally back into the high that brought this low. I mean, technically, it's not even a low on the monthly anymore. It's just one gigantic wick on both ES and the NASDAQ. So what am I anticipating from this? Well, I'm not going to anticipate anything from the monthly chart. I'll more so look at things on the weekly because we still got 12 days. We still got 2 weeks left in this, and we have some significant things happening the rest of the month that could change the trajectory of this month altogether. So that being said, let's drop down to the weekly candles and we'll talk about what happened on the weekly. If we take a look at the weekly candles, again, we had that structural balance, right? That structural balanced area back from April 15th on both the S&P 500 and the NASDAQ. That structural balanced area, right, ended up doing what it was supposed to do. It was balanced price there. When price came back down here, it rebalanced price. Price mitigated this area. We came out of balance, and the result was that we found buyers. So what do you think was going to happen if we came back into this level when we didn't have enough sellers to break through it? Those buyers that bought to take us to all-time highs are now looking to rebuy, right? Rebalance the market. And most likely they're not looking to, not take us to all-time highs. That's why I wanted to be very bearish. Believe me, I really wanted to do. Really wanted to be very bearish. But at this point, I'm still bearish, right? Until we get above all-time highs. Like, this week is going to be super key for the bulls because they came out so aggressively bullish, right? That we expect some type of retracement, right? But if they want to, they can push this thing right to all-time highs, and they have all the catalysts over the next 2 weeks that we'll go over to do so. So I'm still bearish as long as on the S&P 500, as long as we're below 5609 through roughly about all-time highs, 5721, right? Like, I mean, where else can I be, right? I'm bearish until we break those levels. On the NASDAQ, it's very much the same. 20,342 is going to be very key when we get up there. And as long as we stay below 20,993 all-time highs, then I can still look to be a bear. However, structurally, if this is an announcement of a new trend, right? Just think about it. Before the market makes a new trend, it usually sweeps the lows and then sweeps the high, right? So if that's the case, structurally, we should be anticipating for the market to travel much higher than the all-time highs and potentially hit our bullish prediction on the year, which is around 23,000, a little bit stronger than 23,000. So I'll be looking for something like that to happen. But the other thing that I would look for, right, if we're talking structure on the the first thing that I would look for from the weekly, if we're to get a retracement on the NASDAQ, I would be looking at 50% of this week's area, 19,100, to act as a level where price may want to come back to. It may not come all the way back to the low at 18,664, but look for 19,100 to be that level where price comes back to. Same thing on the S&P 500. If we're taking the weekly time frame or the weekly 50% of this week, we're looking at 54.6475. Now, I'm of the mindset that when we get candles like this, right? No body, no wick. No wick, all body. We're probably not coming back to 50%, but we could, right? Usually we get a nice little pullback, maybe 30% of the week, and then we just keep going, right? Like they continue to put the pressure. Because if you think about it, if we come down, that's giving the sellers that are in the sellers that are in pain right now, that's giving them an opportunity to get out of their position. And that's the opposite of what you want to do. You actually want to continue to push the market as a bull to make them close out of their positions so they continue to buy, right? If they're sellers, they have to close out with a buy order, right? So that is what the market will be searching for, is that extreme volatility, right? And pushing the market up will produce those sellers to start selling or buying back their positions, all right? So let's move down to the daily candles and let's talk about what's happening on the daily time frame, right? We look at the daily, right? Every single candle on the daily, on the S&P and on the NASDAQ, we're riding a 1, 2, 3, 4, 5, 6, 7-day win streak, right? There hasn't been a red candle printed in 7 days. After 3 days of aggressive selling, the market came and ate all of that back up, right? Very bad sign if you're a bull, right? If you're a bear. If you're a bear, you did not want to see us get past 54.50 on the ES, and you did not want to see us get above 18,908 on the NASDAQ. That essentially increases our dealing range. It puts us out of 18,718 if we rally up another 100 points, right? It puts us above 55 or 5,600 essentially on ES if we just rally another 20 points. And essentially it turns this entire area here, right? If I take my little ink pen, this entire area will now be controlled by the bulls, kind of like plant your flag, right? This entire area will now be a mitigated area for the bulls, and therefore the market will try to trade higher and then re-tap inside of this area to find more buyers. If we get above 5,600, the only thing standing in our way, in my opinion, for the bulls, for the bears, is this gap fill right here on the S&P and on the NASDAQ. That area sits at roughly about 20,063 on the NASDAQ to roughly about 19,854. On the S&P 500, it sits at about 5589 to roughly about 5628. Once we fill that gap, I think that will be the true sign on what bulls or bears plan to do. Because I know I've been talking a lot of bullishness, but let's talk about the bearish side before we drop down to the 4-hour. The bearish side is that this could be the sellers allowing price to come as high as this gap fill, right? And I'm gonna show you on the volatility index things that I'll be looking for to support this thesis. This could be just a simple higher low, a lower high being placed, right? The market taps this liquidity here, fills that gap, and then we start to travel down aggressively. If that happens, I'll be the happiest man on the planet, because if you guys haven't tuned in, I love when the market turns bearish because the volatility gets very, very strong, right? So we can't tune out the idea that this gap gets closed and the market just comes back down. That can very well happen, right? I don't think it's likely because of the way that we're coming up, but that's just my opinion. Objectively speaking, we could do one or the other. Those are the only things we could do. We're either going to go up or we're going to go down. But you tune into the top-down analysis because you want to hear how I view the market, right? So let's drop down to the 4-hour chart and let's bring over some of our levels from the 4-hour, and I'll kind of explain how I'm viewing the market. So let's go back to normal here on the S&P, and then I'll bring in levels over here in the NASDAQ as well. There we go. Cool. Definitely don't need this up there. These are my rules here. Let me turn this off. There you go, anchor text. Okay, cool. So now let's take a look at the NASDAQ, and let me blow this up here. So we're down here on the 4-hour chart. Now, if we're just looking at this from a structural standpoint, what are we doing, right? What we're doing is we're literally making higher highs and higher lows. That's easy to see. But contextually, where are we? We're currently in the dealing range, or the range of buyers and sellers is this low and this high. We're at the very extreme of the quote unquote dealing range. So what do we anticipate? I would anticipate somewhat of distribution back down to that level we talked about, that 19,100 level. Remember, that's the 50% of the previous week, right? That'll put us right here at this 4-hour demand zone. So what am I looking for? Yes, I have a 1-hour support right here, but what I'm actually looking for is the market to come back down and retest this demand zone. There's a huge imbalance in price right here, sitting at 19,226 to roughly about 19,409. I look for the market to fill this imbalance at some point this week at 19,198 through roughly about 19,101, which would put us right at the 50% fib for the week, right? And give us a great opportunity to put in a low for the week and then continue rallying higher, right? If we start to trade below this level, 19,100, I think that's going to be an indication that the market now wants to come back down and test lower prices. At that point, I'll be looking for retest to play short off the rebalance of 19,100 and then continue shorting until further notice, right? Now, if we do get this bounce off 19,198, what am I looking for? Well, if the market puts in this lower high, right? Let's say we come up here, right? Let me go put this thing going. Okay. So we come up here, we drop down and we put this lower high in. Essentially, I'd be looking for maybe a little bit of consolidation, a reversal pattern, and then start to take out all-time highs, fill in this gap from July 23rd that we talked about on the daily, and then start targeting those all-time highs up there, right? So the gap fill level, again, if you haven't marked it down, is 19,883.75 through 19,939, right? Now, if we're extremely bullish through Tokyo, right? Let's say you're looking to trade Tokyo. What I would be looking for is the market to hold above the daily fib at 19,569.50 and then look to start to trade above the all-time highs or the previous day high into 883. I would prefer a retest, however, of the 1-hour support at 19,514 through 19,408, again, targeting the same level. Now, as far as the week, how we end, I mean, we've basically been moving about, I think it's like 3%, something like that on the weeks. So if we're looking at a 3% move to the upside, I mean, the way we've been moving, it doesn't feel like we've been moving 3%. I think we've gone more toward the 5-6% range on the weekly, but let's just go on the low side at 5%. That level sits us right at these lows here. Right at these highs here at 20,500, right? That's to the upside, right? We take from that same level. And again, I'm just going from this support zone. So bear with me. It's going to be a little bit, off or whatever, but 5% the other way puts us at 18,534. So give or take, I think that we could make some really big moves this week. And like I said, when we move on, I'll show you guys kind of the fundamentals that could also be pushing this market one way or the other. So let's move on to the S&P 500. I'll break down the 4-hour chart over there. All right. Essentially, the levels or the setup is very, very similar. It's just, it's a little tighter on the S&P 500, meaning the S&P 500 has already reached a current supply zone. This is the extreme level, just like on the NASDAQ. The NASDAQ's not quite up here yet, but this is the extreme level. This is the high that needs to hold if you're a bear, because this is the last high that took out this big low right here, right? So if we're going to remain bearish, this is where the market's going to defend, right? It could come up, like I said, and fill this gap fill, right? But we're right there at it. All of this is going to be all the same. So what am I looking for? If I'm looking to be a bear, I'm looking for the market to reject somewhere below 5,600, just like we talked about on the weekly and the monthly. And then I'm looking to take this back down to 54.91, 54.92 through roughly about 54.72. Again, why is this support here, Hobbs? It's because if the market doesn't want to go down further, we're just going to put a higher low inside of this support, and then we're going to start trading higher. The indication of that is going to be when we get above, if we get above 5,600, watch for the market to hold that level. If it holds that level, hold on to your horses. This thing could really, really, really get going. I personally anticipate a pullback, and I'm going to break down the volatility index without going over all these levels. Like I said, the levels are the levels. It's very, very simple. Let's get into some of the information that can actually guide you in the direction before the direction happens. That is the volatility index. What we have here is a massive, I mean a massive rejection off daily supply at 37.32. Since August 5th, the first week in August, we came up here and we got slammed down. This is the daily chart. So we're building structure the whole way down, right? However, we are now on the daily entering into levels that the market should want to bounce, or the VIX should want to bounce. Why do I say that? Well, just zoom out and let's look at the weekly on the VIX, right? This is the all-time low in the VIX. If I turn B adjacent off, you'll be able to see a little bit more. This level 10.2 is the all-time low. Never in the history, since 2019, have we gotten below 12.1, right? And the VIX is currently pushing down toward 14 and 15 area. Every single time we come down here, one of two things happens. We either consolidate, right? And they just keep it here and we have these low volatility pushes, right? Or two, I should say one of three things. The second thing is they'll change the contract. Like we'll jump to a new contract and then they'll gap up the VIX so they continue buying and then they just fill the gap. But the second thing is we bounce, right? And if I'm a bear, which I am, I want to see us bounce. I want to see us bounce off this low. This low brought in 1, 2, 3 new highs. We have yet to defend this entire way down. So what I'm hoping for is either a sweep of these lows and we pop right back up, or a retest of these lows and then we start trading back up. At the exact same time that the market has hit its extreme, the volatility index has also hit its extreme. So now something's got to give. We're either going to start trading through this or we're going to bounce, and that will dump the market. The market will 100% start to dump, because if we start to come back up, it's going to be to take out this high. Vice versa, if the market starts to go back down, it's going to be to take out that long ass wick that you look on your chart and be like, man, that's a 200-point wick on the S&P. That's a 2,000-point wick on the NASDAQ. Yeah, that wick right there. But if we do the latter, which is consolidate, fill this gap, right, on the daily, then we're just going to sit here. We're going to get very, very low liquidity pushes, right? Low run liquidity pushes all week long. So let's talk about some of the news that, I think we should be paying attention to. On Friday, we got Jackson Hole Symposium and the Fed Chair Jerome Powell speaks. That's basically all you need to know, right? That's enough to send this market in a frenzy just on Friday, right? But let's start the day on Monday. That's just where I started. So let me share this tab for you guys. Sorry about that. But on Monday, we got Waller speaking. It's pretty much another no news day on Monday. Tuesday, we have Bostic speaking, but yet another slow news catalyst week, right? But then it starts to speed up throughout the week. 2 p.m. on Wednesday, we have FOMC meeting minutes, right? And then we go into Thursday, we got our usual unemployment claims, but you add flash manufacturing PMI, consumer confidence, existing home sales, et cetera, right? All of your basic stuff. But then, like I said, Friday rolls around and we get the Jackson Hole Symposium, we get new home sales, and then Jerome Powell speaking, right? Now, the following week will be very volatile as well because we have NVIDIA earnings, but that I'll save that for next week. But what I will say is this particular week, right? The reason why I'm so bearish is that the reason why we're up here, right, is because everybody assumes that interest rate hikes are bullish, and they are for the long term. But what the market loves to do is price in things, meaning the market is always forward thinking. So think about this. If the market is forward thinking and people are buying right now before the interest rates come out and say they officially, cut interest rates, then that must mean that the market's forward thinking the bullishness that the interest rates are going to bring. So what do you think is going to happen? And this is just a rhetorical question, I guess, right? But what do you think is going to happen when the market actually gets the interest rate cuts? And now it needs to think forward. Do you think that the market is going to be trying to buy more after the interest rate hike or cut? Or you think it's going to be trying to sell the rumor, right? Or sell the news that it's already priced in. I'll leave that for you guys to think on, but that's all I have for the top-down analysis. I hope this is helpful to you guys. I do it for my Discord, and I just share it here on YouTube. But if you guys are interested in joining the Discord, like I said, the description to the link to the Discord is in the description down below. I hope to see you all soon, and good luck this week, traders. My name is T. Hobbs. This is the Trader Shop. We'll catch you guys on the next one, man. Peace.